Hi folks, Nick here recapping the day. This is April 7th and a red day across the board, but slightly so, however very disappointing. I'll tell you why. Look right here, 2082 was the high on the ES, which is the S&P really, those are the E-minis. almost 20 points lower from the high to the low. 2070, well not quite, 12, 13 points. But you see that exuberance got faded into the afternoon. You never want to see that. That's really dejecting for the bulls. They work hard all day and then only to get erased. What was that? The drag today? Basically almost nothing until the very last minute, but all day Apple dragged, showed us a nice hand at 128.16 before the open, and then closed about 125, let's call it 126 and a penny. So, which by the way is the start of resistance based on the write-up from this morning. Coincidence? I think not. But anyway, so the drag was Apple, sure, so 0.15 of the drag is Apple, so the NASDAQ would have closed flat without Apple. In the morning, let me show you where the strength came from. In the NASDAQ, this box of healthcare was on fire. I mean, this was up 3%, this was up 2%, everything was up big, this box. This box was somewhat, this box was very green. This one was green, closed a little down. Microsoft, real disappointing, didn't back up yesterday's action. It did throughout the day, but not at the end. So you can see they faded the close, and even though we had strong energy, and the one thing it was this is the small caps. Look how red it is, okay, except for the healthcare, except for some IT. Red, 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 red. And guess what? A couple days ago, Thursday, the close on Thursday, I told you there was a change. Small caps were lagging. We noted the change happened again yesterday, and here we are. Today, in the morning note, I said the small caps are still lagging, and look how they broke first. This is the small caps breaking from the high, the rising wedge, 1260. They closed. They're right now at 1249. This is the TF, so add a couple of points to get the RUT. So you can see it's well off the highs and quickly. So they closed down 0.7%, the small caps, almost 0.6 to 0.6, let's call it 0.6. And so they're definitely red. So what happens tomorrow? Tomorrow could be potentially a violent day because we do have a lot of Fed speak, unfortunately, which bugs me because we need to be left alone from the Fed. But we do have, let's see here, Fed Powell and Fed Dudley speaking before the open, one before the open and one at the open. And they'll probably cancel each other out if one is bearish and one is bullish. Also important to note is oil tomorrow. We get inventory. So today oil is up another 3%. So I did speak of a technical breakout that would shoot it to the high 50s. Here we are close to it, and the breakout was here. So we're quite well into it. And tomorrow we'll either make it or break it. So tomorrow, if inventories come lower than expected, boom, high 50s I think will come pretty quickly. And then suddenly we'll be talking oil $60, and then will we be talking, you know, companies are going to have to adjust their earnings because of oils, higher oil. Anyway, so these are potential points of interest as far as talking points. And we also have 10-year auction, but these days we don't know how markets are going to react to you know, today they rallied with bonds, they rallied against bonds, and bonds started the day red and then turned into a really green, vice versa to the 10-year started green, it turned into a really red. So we never know how it impacts the markets. And then, of course, at 11 a.m. my time Pacific, we get the FOMC minutes. Now, mind you, folks, these are past events, yet markets still are crazy, trading them like, oh, this is news. It's not news. They said what they wanted to say. This is just what happened throughout the minutes. Okay, so markets will move on the minutes. How long the move lasts depends on what the interpretation of the markets are of those minutes, so be careful. So what am I doing? I'm just doing what I've been doing all year, adding shorts on pops, and this pop was shortable. Booking some longs on the pops, adding some longs once we draw down enough, but today's drawdown is not enough yet, so I have not added any longs. That's it. Let's look at the ranges. Okay, the ranges have been pretty touch and go. Let's look at the SPY first. Bounced well, great candle, bad candle. Look at the tail it left on the upside here. I'm going to zoom into 6 months. You'll see what I'm talking about. A tail meaning they closed off the high. They had potential and they lost the potential. Not a good thing to see. Volume was a little lower than yesterday, so that's saving grace. One can argue, it wasn't convicted. All right, this is an even uglier candle. It left all the tail and closed on the low of the day. Okay, now they're talking about, uh-oh, now we have technical breakdown and that breakout that we had. So we'll see. We'll see what happens in the next candle to come. Not a disaster on volume either. So let's look at the small caps, which were hanging out the best. Also an ugly candle because they opened here, they tried to run, they failed miserably and closed at the low of the day. Again, we kind of knew they were going to meander, and here we are meandering. The SPX 2076 is the close. We knew that 2050 to 2090, 2085 was going to be no man's land, so bulls and bears are free to push each other around without much resistance or support. Here we are. This is not news to us. So if you did iron condors, you're smiling ear to ear because your premium is decaying and you're collecting money, basically. All right. And there were a few names I wanted to talk about today because they were they came up. And let's go through them. FDX was one of them. Outstanding move today on FDX, although I'm a little confused. Companies used to go out and say, we're buying somebody, and the street used to sell the buyers, buy the buyee. And apparently today they wanted to buy 3% worth of FDX. I think it's a shortable pop, but it's a headline stock. I don't want to short it. I mean, see how it fails at that line. I think credit call spreads here pay. I looked at the premiums. They weren't worth the effort, so I didn't do it. But it is shortable. Somebody else mentioned Monster. Kissed the support, the resistance again, and that is a bad candle like the SPY, remember? It left a tail right up here. You do not want to see that. So now I'm looking at this one versus that one, like a bird beak, flag, whatever you want to call it. And this needs to be filled probably. So if it loses 135, this can come quickly. If it loses this one, this can come quickly. You're saying, oh, that's so much lower. Oh, yeah? Look how much lower it was just 12 months ago. 6 months ago. I'm sorry. 6 months ago. Yeah, so it could happen. They can come back to trade this one. All right, so potential on the upside, break 140, and they can revisit the high, and then from there you determine. It might come over to 150, but from here, if I would make a call, I'd be more bearish than bullish. That's me. Speaking of bearish and bullish, Twitter, wow, another big move. I did send out a note. You saw it. I did say that it could potentially get to here, but I took puts today. Oh, well. I chose both time frames, one with and one without earnings. So, and I think I'm flat between the wash of the two, or maybe a little down. And Tesla, it did not back up yesterday's move, although it did stave a potential downfall today. It looked a little ugly for a little bit today, but then it saved the day. This is a doji candle, slightly green, just barely 15 cents. Doji meaning they open and close about the same place. They try to run it, they try to sell it, and both efforts failed, so they don't know what to do with it. That doesn't mean it erased yesterday's candle, but it still means it didn't close above this green line. So if it does, then potential technical traders might be invited to participate on the upside. I'm holding puts in it, just tester, small, nothing much. And when I take these puts, mainly is I'm protecting the downside scenario because I have a few longs. I double up on the efforts. Hey, I'm protecting myself to the downside, and why not participate with a few names that are overextended, like Amazon. I did mention that earlier. Amazon is yesterday it had a giant candle on the backs of Priceline and Tesla. All momentum stocks did. So who erased those momentum today? Amazon was one of them, so I figured it's a wounded gazelle if you want. It's still very dangerous for it to lose 365 because this will come fast and this will come even faster. So I just took a debit put spread. If it falls to 365, I get maximum gain. If it falls through 665, it's even easier for me to collect on my maximum gain. I chose positions in time where they would also be inclusive of earnings. Why did I do that? Because theta decay is diminished, meaning when you buy a spread or options, time works against you. If price doesn't move an inch, time passing will reduce the value of your asset that you just bought. However, me buying it into earnings, time value effect won't diminish my value because markets are nervous for that period of time because of the event, and the implied volatility, which is, you can consider it as like a VIX for Amazon itself, is twice as high as normal for that period of time because of earnings. So if price does not move, time does not kill my value because it's still likely to move plus or minus $30. That's what the expectations are. Therefore, my spread is still valuable because it can happen. Whereas if I did that same spread for April expiration, not including the earnings announcement, as time ticks, that value of that spread will go to zero. Even though it's cheaper to buy it now, I wasted my money because price did not fall in time. If price falls in time, they both participate. In fact, the cheaper one without the earnings will participate faster, but I need that to happen. Therefore, I'd rather buy it, pay a little bit more, and have a little bit more value. All right, so that's enough said on that subject. Chipotle, I mentioned it because I haven't looked at it in a while, and today was a little red when everything was happy, so I was interested in it. This is an indecisive candle. This is an important level. So if you wanted to put a trade in for earnings, maybe, and it looks like this earnings was a sell, this earning was a buy, this earnings was a sell, this earnings was a sell. So I've got 3 sells and a buy. It's a weighted coin to the downside. So if market's correct, this one will correct too. That was my thought. Somebody asked me about Carnival. Not a stock I usually trade. Is it a breakout? I said it needs to close above this green line for it to qualify as a breakout, but sure is nice, right? I don't know anything about its fundamental. And if it does break out of that, it may reach for the extension of the orange, which is even higher. But you know, you got to know something about it in order to go that bullish. This was on a big volume day, so I don't know if it had news or what, but that's the story there. I'm not a fan, but you might know more about it. I was also told to look into Hormel. Also nice trend. Now needs to hold this orange line, because if it fails 57, it has habits of whooshing down. So if it fails 57, it may come down to here again. But that's just speculation on my part. It may be reaching for these 2 pokes. Okay, we had 1, 2. Maybe it's reaching for a 3rd one. But if it can't reach these 2, then it's more likely that it's headed down from here. I don't know anything about its fundamentals. It will report soon enough, probably in May. Okay, Monster, Twitter. I think that's it. Amazon, we talked about it. Somebody also said to look at Netflix a little bit. And Netflix is the same position as Amazon. It needs to hold this red thing here. See that doji? This is a perfect doji. Let me zoom in to 3 months. You'll see it. Look at that. My cursor, that's not my cursor. That's the candle. Could not be more perfect. Look, I can hide my cursor in front of the candle. Look, that's my mouse on top of it. Gone. That's indecision, folks. That's market saying, I have no idea what to do with this stock. They opened it here. They try to run it to here. They try to sell it to here. They both failed. They said, you know what? Let's close it exactly where it opened. That is how you visualize indecision trade on the day. So indecisive in an iffy area with a big gap below it. If the market's correct, this one is going down much faster than everything else. So I could have picked a short in this one via a debit put spread instead of Amazon, but I chose Amazon. Maybe I'll do this one tomorrow. No, I don't. I'm just kidding. I don't want to put too many shorts that are not offset by some longs that I'm collecting credit on. All right, Nick signing out.